To address the funding question, let me just say I've never counted the minutes speaking time relative to flying time and come out with 5 hours per minute, as I've just done. So I'm a little bit in shock. Excuse me if my comments reflect that. I think on the funding side, it's not true. I don't think it's true to say that there's sufficient funding in Africa. The reality is, when you look at the capital markets in Africa, you've got effectively 1.2 billion people in Africa, 54 countries, around $1.2 trillion of GDP, $350 billion of GDP coming out of South Africa, 250 out of Nigeria, and about 100 out of Angola, and the rest of the countries are relatively small. I'm talking excluding North Africa for a second. Mm-hmm. And the market capitalization of the JSE is somewhere around 80% of the total market capitalization of all capital markets in Africa, including North Africa, and the liquidity is the same. So 80% of the average daily trading volume of the capital markets is on the JSE. So when you exclude South Africa for a minute, which is a sophisticated financial market, the fact is that there is very little liquid capital markets in the equity and the debt space outside of South Africa, servicing quite large and high-growing markets. So Nigeria growing 8%, Angola growing certainly north of 10%, question how much it's growing, and Uganda, Kenya, Tanzania showing promise of the current oil infrastructure going to be built to support the Uganda oil find. And so I think there is significant amount of projects, investment, and growth that's been talked about in terms of consumer growth, mobile services, consumer retail, servicing this emerging black middle class in Africa that is going to need capital. And the fact is, capital is returned, and ECP will tell you, and they've done an incredibly good job over many years, will tell you that they've earned probably on average 30% dollar IRRs, if I know from Actis, Ethos, ECP, and so on, over an extended 20-year period. But they have raised relatively small amounts of capital relative to the long-term need. And so private equity is going to play a very, very important role in terms of oiling the capital markets in Africa. The sovereign wealth funds, people like Temasek that have announced this recent fund with the Oppenheimers, are playing more of a role, Kingdom Zephyr, these type of funds. And so I think between sovereign wealth funds and private equity, they're playing a very important role and will continue to play an important role. I think the mainstream institutional investors, and you've heard from one pension fund, but there are many others, and the hedge funds, people like Noonday, Oxif, these type of entities, are going to be very, very important. There's a cold wind going through the global capital markets, which is very concerning. And so what that'll do is it'll raise the bar on the return on equity required to mobilize the capital, and it will create a greater bar of risk reduction in these African countries to continue to attract the capital. And why is that? Because certainly as the global financial issues grow, there are going to be more and more opportunities in developed markets for good returns as the capital becomes scarcer in developed markets. And so the good opportunities that'll flow into developed markets will get good returns. So in a place like Africa, there's going to be a higher bar to get higher returns. But I do think that what's been said is off a low base of African absolute GDP numbers. There's a huge growth opportunity, and capital will continue to flow as long as the right things are done. I do think that countries like Nigeria will receive the greater amount of capital and greater amount of attention. Last thing to say is, with my 3 minutes, the fact is that the indigenous reforms that are taking place need to intensify. And that I think there has been significant performance in that regard. The one obvious example is the clean out of the banking system in Nigeria by the central bank, and they've done a very good job of it. But I think that what's going on is over and above these indigenous reforms, you've got a confluence of events. China investing in the continent, 1 million Chinese parastatals. We've just advised Jinchuan on the acquisition of Metarex, which is a JSE-listed company with operations in DRC and in Zambia. The Massmart Walmarts of the world. Then you've got the South African companies, ShopRite, Pick n Pay, Massmart, these type of people moving into the African continent. You've got the Brazilians moving into the Portuguese-speaking countries in a very aggressive way. And you've got the Indians moving into East Africa, like Zain establishing its headquarters there. And the combination of these things is a bit of a buttress. It's belts and braces, reinforcement of the reforms that are happening in these countries. So as long as capital continues to flow, I think there is lots of opportunities. The final thing, I think, is the governments are being slow. Let's just say it. The power reform process in Nigeria is very poor in terms of the pace at which that is happening. And it's so critical to that economy that there is that power reform to get that economy moving. You can't have 8% growth in a $250 billion GDP country with 4,000 megawatts of power. It doesn't work. And so it has to be done. And those are projects that will take immense amounts of capital. I know the Minister of Energy in Nigeria said $10 billion a year. Now, I don't know whether that's the correct number or not, but that is a significant amount of capital. There's significant people, the Chinese and others, who would be very keen to see these type of projects happen, who would support it, but the government needs to create the environment for those projects. It's a very broad question you've asked, firstly, because it depends on the nature and the size of the project and so on and so forth. But let's assume for a moment that it's at the high end of the risk curve and there's projects that are going to struggle to get done. I actually think there's some quite sophisticated financial players, including hedge funds out there, who are prepared to take fairly exotic risk, whether it's currency risk or project risk, as long as it's structured in a constructive way. And I think there's a lot of banks. That's a good thing. Our competitors, very much out there who are helpful to restructuring solutions. So even if it means, providing debt-like structures with equity-like returns, which is sometimes required to get the projects done, I think people are thinking about constructive ways of structuring financial solutions. So I think that the key issue is actually not so much the financial solutions in many of these projects, but rather the nature of the projects, how mature they are, how much the government is creating an environment in which you can actually deliver them, or they're private sector projects, the extent to which there's a market for those projects. But just look at the history of MTN. They bought the license for $200 million. They've created a business that's probably worth somewhere around $20 billion today. And it's an incredibly successful business. 45% of the EBITDA of MTN comes out of Nigeria today. And they've managed to, through the cycle where the demand has been there for mobile services, keep funding those projects and building the infrastructure.
Doing business in Africa, you can't afford to be without Africa Investor.